Welcome to Alpha Recap, your after-hours wrap of the market day. We're Hope and Tyler, and today we parsed the quick briefs that landed after the close. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed mixed, but the headlines were loud. Litigation and microcap fireworks stole the show.
Totally. So what really stands out here is the twin theme, a cluster of class actions hitting a few mid-size names, while a separate wave of retail-driven momentum pushed a bunch of tiny stocks way higher. Those two forces together made for a pretty volatile session.
Right. Analysts note that those are the dominant market movers from today's briefs. Legal headline risk on one side, speculative retail flows on the other.
Let's start with the litigation. Hagens-Berman filed suits against 3 companies this week: Oddity Tech, Hercules Capital, and Coty. Each complaint raises different disclosure or operational questions, and the market reacted.
Oddity Tech's case is the one that jumped out. The complaint alleges the company misrepresented an AI platform disruption and a revenue decline. That followed a share drop of roughly 49%, and the suit covers purchases from February 26, 2025 through February 24, 2026.
A big drop like that matters because outages in AI platforms hit growth narratives hard. I mean, when you step back and look at this, premium multiples for growth names get pulled down fast when execution doubts show up.
Exactly. Then you've got Hercules Capital. The complaint alleges misstated portfolio marks, questions about valuation governance, and use of payment-in-kind loans, or PIK loans, in the portfolio. The alleged purchases in that suit cover May 1, 2025 through February 27, 2026.
Quick explainer. A payment-in-kind loan is where interest is paid in more debt rather than cash. In a higher rate environment, those structures and any fuzzy valuations can pressure a fund's net asset value. And analysts note that investor confidence can wobble pretty quickly.
And then Coty. The consumer name suit follows a surprise profit decline, a CEO departure, and the company pulling its 2026 guidance. That complaint covers purchases from November 5, 2025 through February 4, 2026. Consumer names with unexpected earnings shortfalls often face sustained volatility, while guidance and leadership are sorted out.
Litigation like this often triggers headlines, potential legal costs, and increased disclosure requirements. Analysts note these effects can extend beyond a single company if similar issues appear across a sector.
Right. And the other thing is, with Hercules Capital, for example, if valuation governance gets scrutinized there, it could raise questions for other alternative credit managers and BDCs. That's potentially an industry-level theme, rather than just an isolated stock problem.
Okay, switch gears to the microcaps. This was wild. We saw multiple double and triple-digit % jumps in low-priced names. The numbers are hard to ignore.
For example, GV surged about 117% to roughly 44 cents on about 571 million shares traded. That's massive, both in percent and in raw volume.
SKYQ, that's another big one, ran about 102% to approximately $5.10 on roughly 200 million shares. AIXI was up about a third to about 13 cents on roughly 209 million shares.
Then there were names with big percent moves, but tiny liquidity. LCFYW was up about 60% to $2.80, but that was on only 126 reported trades. That's a reminder that percent moves don't mean the same thing across different liquidity profiles.
Yeah, that tracks.
DSX Plus was up about 50% to 30 cents on 52,000 shares. And KTTAW jumped about 92% to 2 cents on 57,000 shares. Those compressed absolute prices mean small dollar flows can create huge percentage moves.
So, honestly, I was a bit surprised by this one. The data suggests heavy participation on names like GV, SKYQ, and AIXI, which could mean momentum continuation or a sharp mean reversion, depending on catalysts and who's in those trades.
And for those tiny volume names, price moves are often fragile. Analysts note trades on single-digit volume or only a few dozen reported trades are fraught with execution risk and wide spreads.
Short segment, quick reactions.
Big moves, big risks.
Not for the faint of heart.
Right. Now, linking the litigation and the microcap action. Elevated volatility in small caps can attract short-term retail flows and algorithmic momentum strategies. Those flows sometimes amplify headlines, including legal notices, especially if a microcap gets hit with a suit.
So if Oddity Tech or Hercules Capital saw retail interest or unusual options flows, the reaction from retail and institutions could look really different and widen intraday ranges. Analysts note that creates elevated event risk for holders of these names.
Another angle today was consumer behavior. Google Trends flagged a big jump in searches for mortgage calculator, roughly 50,000 searches, and up about 300% versus baseline. That's a big spike in attention.
Why that matters in plain terms? When people start Googling mortgage calculators in a big way, it often signals rate shopping, refinancing interest, or planning to buy. That can lead to more mortgage applications, which feed into mortgage-backed securities, originators, and real estate platforms.
Analysts note that a surge in mortgage-related searches is an early consumer sentiment indicator. If weekly mortgage application data confirms higher activity, lenders and fintech platforms could see flow impacts.
Looking ahead, what to watch when markets reopen. First, official statements, SEC filings, or court docket entries for Oddity Tech, Hercules Capital, and Coty. Company responses often drive the next wave of price action.
Also watch pre-market and early session volume on the microcaps. If names like GV, SKYQ, and AIXI sustain heavy flows, analysts would see that as confirmation of momentum. If volume fades, retracement is more likely.
And for the housing signal, check the weekly mortgage application numbers and any movement in mortgage rates. That will tell you whether the Google Trends spike translated into actual borrower behavior.
Finally, keep an eye on sector spillovers. If the Hercules Capital complaint sparks questions about valuation practices and alternative credit, you could see stress in BDCs or related credit-sensitive assets.
Bottom line takeaways. 1. Litigation drove headline risk across tech, alternative credit, and consumer names today. 2. Microcap momentum remains alive and can produce explosive percent moves, but liquidity matters, and tiny trade counts are a red flag. 3. Consumer attention around housing climbed noticeably, and that could foreshadow mortgage activity.
Analysts note, and we'll say it again, these developments increase near-term volatility. Confirmed volume and official corporate disclosures will be the primary clarifiers of whether moves are durable or just headline-driven blips.
Remember, this is informational only. We're not recommending any trades. Use these data points to inform your research and consult your advisors for decisions.
If you want more detail on any of the names we mentioned, head to stockalpha.ai and ask us. The Q&A feature lets you submit questions directly, and we'll answer live.
For a final sign-off, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you next time after the close.